All right, guys, here we go. Just a real quick video on the natural gas. Natural gas futures is what we're looking at now on the weekly chart here. And the reason why we're looking at the weekly chart is that still believe we won't get a positive reversal that'll last, for a few days or maybe even a couple of weeks until we get a little further down between 217 and whole round even number at $2. Down here, as you can see, the last time we had any type of significant push to the upside was going back literally to 2021, where we had two factors here on this green candle where the blue arrow is that we called for our Patreon members, and then right here, the other blue arrow with this black area here on the chart where we went long as well. And let's break this down and show you exactly what has happened over the last couple of days. Well, this week actually. Starting Monday, Tuesday, we had a nice little potential breakout, pulled a lot of people in. A lot of people interested in Boyle, UNG to try to play a bounce. But they came back in Wednesday, and part of that was because the DXY was pumping to the upside, being stronger to the upside. Took out all of this, 1, 2, 3 days, closed under all of this. Here we are today, kind of, trying to make a little move here, but not for sure that's going to be significant. And let me show you how markets reverse. This is very important that what it looks like, what needs to happen in order to get this price to do a 180 back to the upside. And the first one is a V-shaped recovery. The second one is a W-shaped recovery where you have a low, higher low. Now, actually, this is the one that you want. It's the strongest, the best, has the highest probability moving to the upside. And let me show you that in real life here. And let's go to the weekly. It's the Dow Jones. Everybody's heard of the Dow Jones. And if you see here, this was during COVID, slammed down, then a V-shaped recovery. But what I want to show you how important those W-shaped recoveries are after the biggest downdraft, biggest market crash, pullback, however you want to call it, so far in the history of the U.S. stock market. Right here during 29, 30 crash, we put in a what? You can see it right here. This real nice W-shaped uh, formation, and we got over the 20, which is for another video, but very important. So as you can see, even going back to I know I'm getting a little off topic, but I just want you guys to know this stuff. Going back to 1932, even though they didn't have fancy charts like this on computers, obviously the market still played out just like they do modern times. So let's go back to natural gas, and we will look at it here on the daily. So yeah, so what we're looking for, we need actually let's go to the weekly, and we're expecting natural gas to roll. This might end up being just a pause candle. After a real strong time count, we roll over into a significant measured move here. That gray dash line, our Patreon members know what that is, into that 217 down to $2. And we believe once we get around that $2 range or price actually, then we'll get a multiple day, maybe in a multiple week over so bounce rally here in natural gas. Of course, that has to be in concert with a weakening DXY US dollar currency index, which is what we're looking at now. Let's go to the daily. And the trick here, how we able to call that if you've been watching, uh, is in, right here on that 50. See the green moving average here? It's the 50 simple day moving average. And 1, 2, 3, going on 4 days, 4 rejections here. Plus we had this low pivot consolidation zone we couldn't get through. And yeah, so obviously pulling back here. And in a nutshell, what that means, the deeper, the dollar pulls back, that should be more positive for gold, silver, the stocks, crypto, if they can catch a bid. We can get a little bit of good news out here in the markets. Now, the more shallow that an asset pulls back, like if the dollar did this, pulled down into this sideways consolidation support zone here. See how we consolidated? Couldn't get over there. So previous resistance is going to be support now as we pull back into it. So possibly, so we don't want to get a head fake here. Everybody go all in on risk assets, and all of a sudden we get a shallow pullback and then a rip to the upside because maybe the Fed stepped in and started supporting the dollar here. So they have to do one of two things. They're kind of in a corner. They have to support the stock market, or they're going to have to support the dollar, and that remains to be seen. And then in the meanwhile, we were stopped out yesterday or overnight, but got back in on this micro futures, uh, oil futures here. Uh, and that's, big red candle coming down. We got up here, we had two factors and that's why I'm even speaking on this. We had two factors that initiated that. Let me take that 50 off so you can see more clearly. That initiated this position to go short. Okay, we never do anything unless we have two factors involved, two reasons for doing that. And then here, as you see, we're still short gold, and with 5 contracts. You don't have to use 5 contracts, but anyway, this is micro futures gold. And we came up here, that green dash line, look at that, to the penny. That gold hit it in reverse, so that's why we stayed in our short position from way up here, as you can see. Okay, and our Patreon members know what that means. And then with silver, same deal. We didn't even get close here. And then, as you can see, we're in the green from way up here on silver. And then our significant price level measured move along with the 200 is down here around 21. So that doesn't guarantee that we'll hit it, but that's where we're looking for uh, silver to possibly get to near term. And in the meantime, we'll look for that if the dollar continues to trade under support and starts falling deeper, then we'll look for that V-shaped recovery on silver, or this W-shaped recovery, and then we will scale out of our long position, our short position, and go long, or we'll we're able to control 3,000 ounces of silver here for $6,100. Okay. And we teach all that, shameless plug, in our micro futures, introduction to micro futures trading. And I'll link that course below if anyone's interested. But with this, as we begin to bottom out, when you're holding gold or silver, you can't short it as a physical, entity, okay? But with the futures, micro futures, technically, you can go in and short it. And then when it goes to reverse, guess what? You can take whatever profit you have, to make, and then, if you wish, roll it into the physical. So you're not, kind of, have gone through all those mental gymnastics of you're sitting there with your physical gold or silver, and you're seeing the price drop on the charts, and you're not for sure, what you can do. Well, with micro futures, you can short it and make money on the way down, and that's a little bit easier on your psychic, okay? But all right, guys, thanks for watching the video. Give us a follow on Twitter, and we will see you on the charts.